You've been lied to about the economy. From Wall Street to Washington, the truth is that what you see in the mainstream media is only half the story. There are things happening behind the scenes that could make or break your portfolio. So get ready to wake up because we're about to expose everything they don't want you to know. We all love a good mystery, but this one hits close to home. It's time to uncover the shocking truth about the economy, politics, and the stock market. But first, let's set the stage. We'll dive into the wild world of global finance and expose the inner workings of a system that's designed to keep you guessing. Get ready for twists and turns that will leave you on the edge of your seat. Think you know the economy? Think again. What the news doesn't show, you could change your wallet and your future overnight. You scroll through your phone, seeing stories about inflation, crashes, and record highs. You hear terms like quantitative easing, fiscal stimulus, and interest rates. But do you really know what they mean? Do you understand how these policies impact your investments and your life? Most people don't. They see the headlines and freak out, but there's a hidden game going on, one that those who know the rules play to make millions. From Washington to Wall Street, every ruling, tweet, and policy can send shockwaves through the market. And most people have no clue what's happening behind the scenes. The economy isn't something you read about once a year. It's a story that unfolds daily, hourly, even by the minute. And if you're not paying attention, you could miss the biggest opportunities. Let's start with the players. You've got the Federal Reserve, the central bank of the United States, which controls the money supply and interest rates. Then there's the Treasury Department, which manages government finances and issues bonds. Not to mention the countless financial institutions, investment banks, hedge funds, and individual traders who all have a piece of the pie. And let's not forget about the elephant in the room, the United States Congress. These folks make the laws that everyone else has to follow. And believe me, they have a lot of say in how the economy runs. But the real game is played behind closed doors. It's a constant negotiation between big businesses and politicians. And the stakes are higher than you might think. Take the recent infrastructure bill, for example. It was supposed to modernize America's roads, bridges, and internet access. But what does it have to do with the economy? Well, almost 1/3 of the bill's funding comes from taxes on corporations and wealthy individuals. That's right. The government is taxing its own citizens to pay for public works projects. This is where things get interesting. By investing in infrastructure, the government hopes to stimulate economic growth, create jobs, and improve the country's productivity. But who benefits the most? The answer may surprise you. One study found that infrastructure investments have a ripple effect across the economy. For every dollar invested, there's a return of $2.30. That means the government could raise taxes by $1 and still end up with a surplus. So what does this mean for you? Well, when the government invests in infrastructure, it creates jobs and boosts economic growth. More jobs and a stronger economy mean more money in your pocket. So while it may not feel good to pay taxes, know that your government is using that money to build a better future for everyone. But here's the twist. Not everyone benefits equally. Companies that win government contracts and benefit from improved infrastructure tend to do better financially. Take a look at this chart. Since 2009, the Dow Jones Transportation Index has outperformed the S&P 500. That means companies involved in transportation, logistics, and infrastructure have seen better financial results than the broader market. So if you want to stay ahead of the curve, you need to know where the government is investing its money. As the government pumps more money into infrastructure, you can expect companies in related sectors to thrive. But let's take a step back and look at the bigger picture. Remember, the government isn't the only player in this game. You also have the Federal Reserve, which controls the money supply and interest rates. When the Fed increases interest rates, borrowing becomes more expensive and the economy slows down. On the other hand, lower interest rates can boost economic activity. So what does this mean for you? Well, higher interest rates can put a damper on your spending power. When you borrow money at a higher interest rate, you'll have less discretionary income to spend on other things. Lower interest rates, on the other hand, can give your wallet a little more breathing room. It's like a balancing act. The government and the Fed have to find the perfect equilibrium to keep the economy humming along smoothly. But here's the catch. They're not always on the same page. Sometimes the Fed's policies can counteract the government's spending plans. It's a constant push and pull that can make predicting the economy a bit of a guessing game. But that's where your knowledge of the rules comes into play. By understanding how these policies work and how they interact, you can stay ahead of the curve. Consider this. When the Fed raises interest rates, the value of the US dollar tends to increase. A stronger dollar can impact the prices of imports, making them more expensive and potentially leading to inflation. It's a delicate balance, and the Fed has to be careful not to tip the scales too far in either direction. So what can you do to stay ahead of the game? Well, knowledge is power. The more you understand about the economy, the better positioned you'll be to make smart financial decisions. Consider this. When the government invests in infrastructure, certain industries like construction and technology tend to benefit. On the other hand, when the Fed raises interest rates, industries that rely on consumer spending, such as retail and travel, might take a hit. By staying informed about the latest developments, you can adjust your investment strategy accordingly. Now let's talk about the media. They like to paint a rosy picture of the economy, but the truth is that things aren't always as they seem. When the media tells you everything is fine, it's worth asking questions. Are they just reporting the facts, or do they have a hidden agenda? Well, it's not always black and white. Many media outlets rely on advertising revenue and may avoid reporting on negative economic news to keep things positive. After all, advertisers like to be associated with good vibes, but that doesn't mean the media is intentionally lying to you. It's more like they're selectively highlighting the good to keep things upbeat. So what can you do to spot the hidden agenda? Well, it's important to consider the source and look beyond the headlines. Try to read between the lines and ask yourself, who benefits from this story and why? Diversifying your news sources can also help you get a more balanced perspective. And don't forget to fact-check. Just because you see it on TV or read it online doesn't mean it's 100% true. Take some time to verify the information and make sure it's coming from a reliable source. But let's not forget about the ultimate puppet master, money. It's everywhere, influencing everything. From politicians to the media, money talks, and it's up to you to listen closely. Now let's talk about the real movers and shakers, the people who make the big decisions and call the shots. When you hear the term lobbyist, you might think of shady backroom deals and secret agendas. And well, you wouldn't be entirely wrong. But the truth is that lobbying is a part of the political process. Companies and interest groups hire lobbyists to represent their interests and advocate for policies that benefit them. But it's not all sunshine and roses. Lobbyists often have a disproportionate amount of influence over lawmakers, and the process can be opaque and hard to track. So what can you do to stay in the know? Well, transparency is key. As a citizen, you can demand more transparency from lawmakers and lobbyists to ensure that their actions are in the best interest of the public. By staying informed and speaking up, you can help create a more equitable and democratic process. If you're feeling motivated, consider getting involved in politics yourself. Run for local office, join a political party, or volunteer for a campaign. Every voice matters, and your participation can make a real difference. And hey, if you're not into politics, that's okay too. You can still make an impact by supporting organizations that align with your values. Donate to charities, sign petitions, or attend protests. Every little bit counts, and your support can help drive positive change. So remember, you're not powerless in this game. You have the ability to make a difference. So don't sit on the sidelines. Get involved and be a part of the solution. It's time to level up your financial IQ. If you're ready to decode the hidden rules of the economy and master the game, then congratulations. You've just earned your membership to the inner circle. Keep watching us to stay ahead of the curve and make smarter financial decisions. But don't stop there. Dive deeper into our platform and explore the resources that will help you navigate the complex world of finance with confidence.